Hello, everybody. Welcome back to another episode of the Loan Officer Wealth Podcast. We are blessed to be joined with SHASHANK SHEKHAR. SHASHANK, welcome to the show.
Thanks, Chris.
Awesome. So to get started, would you give us a little bit of your background, how long you've been in the mortgage industry and how you got to where you are today?
Sure. I got in the mortgage business in 2008. I was 18 months in the country. By the way, I'm yet to find someone who actually got in the business in 2008. And I worked for a VC-funded company in India. I got transferred here as head of business in Silicon Valley, where I live. And that company was in the mortgage space. They shut down within 18 months of me arriving, which is not a surprise given it was the year 2007 and 2008. So here I was, less than 2 years in the country, knew three souls in the entire country. And those three souls were people who just got fired with me because the company shut down. And I had $1,900 in savings, and the year was 2008. So that's
Wow.
where I was. But for some reason, I always wanted to start my own company. That was my thing, even when I went to business school to do my MBA. And for some strange reason, I thought this was the time to do it. Otherwise, if I went and found another job, I'll probably be too old to take the risk that's required to be an entrepreneur, and I'll probably be too far down the road to ever try it again. So even with all the headwinds that I had, that's the year that I started my mortgage business. And of course, I very quickly realized that it was probably the most foolish and stupid decision that I've taken in my entire life. And struggled to do 7 loans in my first 12 months, which is actually quite an achievement given the fact that I knew no one in the entire country and had no money or anything else really to get a head start there. But I started working the business very differently than practically any other loan officer at that time. I was one of the first mortgage bloggers in the country. There were less than 5 people in 2009, also born out of necessity, actually, because I had no other way of getting business. So I started doing a ton of things around personal branding, which was a very new concept in the business back then, whether it was blogging or speaking or social media or getting into media to be quoted by different publications. All of that was a very new concept for any small business, let alone mortgages, which helped me become one of the top 200 Scotsman Guide loan officer 5 years later, went on to become top 15 in the country, a ranking that I held last year on National Mortgage News ranking. So yeah, it's probably a very fast forward from year 1 to year 13, 14, but yeah, that's where I am. Of course, I'm not just a loan officer. I run what was named the fastest growing mortgage company for 2 years in a row by Financial Times, InstaMortgage. So I'm the founder and CEO of that company as well.
That is an incredible journey, and
Thank you.
congratulations.
Thank you so
So
much.
being one of the first bloggers in the mortgage space and building InstaMortgage, I'm interested in the technological journey on,
Sure.
I mean, you're ranked #1 in San Jose for
Sure.
mortgage lender, some incredible ratings and reviews on your profile. But before we get there, I'm interested if we go back to those first 7 deals that you did.
Mhm.
How did you go out and get those deals when you were brand new in the business?
Yeah, it's tough. And those 7 loans, I probably remember their names, their LTV, their property address. It's actually surprising, Chris, is that I can remember the LTVs and loan details of my first, say, even loans that I did 10 years back. And I can't remember one that I closed 10 days back. Is just because the volume is so much more. I am not probably focusing on every single loan. Back then, I was closing one loan every 2 months. I remembered probably their social security numbers. You could remember all of that. Yeah, but first 7 loans were tricky. I mean, first 2 actually came from the company I was working with. Of course, that company shut down, and there were a couple of loans which were still in pipeline. And I requested the president of the company who I was reporting to at that time, "Hey, can I take over those loans?" And he was more than glad because, of course, they were shutting down, and I could take that over. One loan came from my wife's colleague at work where she was working. And then a couple came from the referral that I got from that specific client. So really it was hard work, but really just getting the word around the fact that, hey, I'm doing mortgages, and that helped in the first few transactions. Also, at least starting year two, so the blogging has started producing results. It took several months. I remember I was blogging for 6 months straight, writing 3 blogs every week before I got my first call saying, "Hey, I saw your blog on the web," or "I saw you on the web," which is interesting because most people that I have taught blogging to, and I've taught probably to thousands of real estate and loan officers, real estate agents and loan officers since, most of them quit after month two, some quit after week two, is because, hey, this thing doesn't work, kind of a thing. And here I am 13 years later, is still blogging, is still getting leads, is still making money from it. So
That is amazing. And that's the thing with social media. It's database marketing, it's referral partner marketing. Consistency is where the results come from.
correct. Mhm.
So InstaMortgage today, you've got
Mhm.
254 five-star ratings and reviews on Google, still, I believe, in the top 15 lenders in the nation. Where do you get the majority of your business from now?
Yeah, so I have, even when I was just a loan officer, I was very clear that you need to have multiple pillars of customer acquisition to be, if you ever want to build sustainable and predictable business. I'm not saying that it will not have its ebbs and flows. That's what mortgage business is for. That does not guarantee that you will be consistent year in and year out. But what it guarantees is that, hey, you can get your minimum production numbers that's good enough for you to survive that year or two before you get back to thriving because the market moves. The problem with most business models, whether it's companies or loan officers, is that they don't have several pillars of acquisition, right? We as a loan officer, typically it's, hey, all I do is get business from my real estate agent, or all I do is get referrals from my customer. So very early in my production, that's a lesson that I learned. Again, some of it born out of necessity because I had zero sphere of influence, is the fact that, okay, blogging is one platform, which is direct to the consumer. That's an online platform that I have. But database marketing for me, for example, has started from Loan One. A lot of people say, oh, Shashank is such a good database marketer because he has 10,000 people or whatever in his database. But I started that. You actually need database marketing even more when you have less in your database than
Yeah.
more, because more, if you have so many people, then some of them will refer you customers anyway. I mean, that's just organic way of you getting referrals because you did a great job when you close their loans. But when you have less people in your database, when you're day one in your business, that's when it's even more important. And I think I realized that on day one. Some of it might just be because of the fact what I was doing before that. But my first 7 clients are probably worth, I mean, I don't have exact number, but anywhere from $250,000 to $500,000 each, is because what they have given. Of course, they came back to me with 3, 4, 5 times because of how the interest rates have moved in the last decade, that I've refinanced them several times. They have bought some investment properties, move up properties, but also the people they referred. So anyone listening to this show, I mean, that's the power of database marketing. It's almost like compound interest, right? The earlier that you start, at 18, if you start investing $1,000 a year, that's worth so much more than if you start investing $500,000 when you're 45 or something, right? It's the same concept with database marketing. If you start doing with your first client, and if you're on year 3 or year 4 or year 10, wherever you are, the best time to do database marketing was yesterday. The second best time is today. As I as I intend to say, is that don't ever say it's too late, and it's never too early, of course, to do it. So I think that has been a big play. So for me, again, going back to your question, so I learned it very early that you need to build multiple pillars of acquisition. So whether it was realtor referral on one side, database marketing, direct to consumer, and then fourth was more miscellaneous. I got some business from CPA. I did some BNI, got some financial planners, so they're miscellaneous pay, but that was still a solid pillar for me, even though the volume wasn't there for every single. So I kind of took the same approach when I started growing the company 2 or 3 years back. And it was the same thing. So for us, one, of course, our strongest pillar are our loan officers. So our retail distribution, so to say, loan officers bring us most business. I still continue to originate and bring a fair amount of 10 to 15% of the company's production still comes from me. But then we have built, of course, the other different stronger pillars of business. For example, for real estate referrals, we just launched what we call Insta Offers, which is a competition to Zillow and Opendoor. It's an iBuyer platform that we provide directly to sellers, but through our real estate agents. So the difference between Zillow and Opendoor, who they want to put real estate agents out of business and go directly to sellers and buy their homes for cash, we do the same thing, but we route it through our real estate agents. So they actually make more commission when they sell through Insta Offers than if they were to put it directly on the market. And that's bringing us a lot of real estate agent referral partners, is because everyone wants to have that product into their arsenal, is because otherwise they're competing with the Zillows and the Opendoors and the OfferPads of the world. So imagine having the option to compete and still make your commission and more. So that's one pillar where we are empowering our loan officers to bring even more leads and even more partnership through real estate agents. And our fourth really big channel is partnership with other fintechs and proptechs. Again, something which very few, if any, companies do right now at a scale, because you can get one client at a time, one real estate agent at a time. But my game has always been, how do you scale something? Like, how did I go from, for example, doing 7 loans, which was whatever, $3-4 million in first year, to be doing $350 million. So scaling has always been something I've been focused on. And so even when it comes to client acquisition and building those pillars for InstaMortgage, my thing always was, okay, we can go one loan officer at a time, one real estate agent at a time, but how do we get in front of hundreds and thousands of potential clients? For example, in fact, it's been a couple of months, we signed a partnership with a proptech company that has 1.2 million homeowners on their platform, and we get exclusive access to about 80% of them. So that's the scale that we are talking about. And that's the partnership pillar that we are working on. Learning from that experience, we are now partnering up with even more proptech and fintech companies that work with renters or homeowners, but do not provide mortgages as a service. So that's where InstaMortgage comes in.
That is just absolutely brilliant. So on that, okay, that was so much and so valuable. I have so many questions. Okay. First off, before we get to the technology aspect of things, the database marketing. I hear so often, my company is sending my email newsletter, or I'm sending an email newsletter out. That's all the loan officer is doing, but they think that they're taking care of their database. What are you doing in order to actually get results from your database marketing?
Yeah, again, depends on the size of it. I know if you have 10,000 people, it's difficult to get on the phone with 10,000 of them. But I was assuming most people listening to it are probably not everybody is top 50 loan officer in the country or top 100. So probably you don't have that size. And that's just to say that you have more opportunity to connect. The smaller the size, actually, the more touch points you can have and the more personal touch points you can have. So of course, technology has its play, right? You should have your good CRM, you should have good campaigns, you should have in-process campaigns, you should have post-closing campaigns. And by the way, I'm saying those are table stakes. So if you don't even have that, first, of course, go and fix some of those stuff. But on top of that, I mean, if your CRM alerts you, I mean, I remember, Chris, that for a long period of time, my CRM was Google Sheet and Google Docs, so to say. So even though there was no technology, that did not deter me from, say, following up with my database. And all you have to really do, for example, I mean, I got an alert for a 6-month check-in. This just happened yesterday. I followed up with a client and she said, you know what? I mean, she lives in a 1.4 million property and has a $400,000 mortgage with, I think, 2.875 or 3.25. On the face of it, that's not a lead. And you will probably not waste your time. You just let your CRM send an email and get done with it. But I made an effort to follow up. And she said, you know what? I was actually looking to scale down and move down, really, is to buy a smaller home because I have enough equity and sell this and kind of have a little bit more financial security. My son is already off to college, so that's taken care of. And now she wants a HELOC on that, and she wants to buy another home. That's 2 leads for me on one day, is because of the fact that you made an effort to actually connect with the borrowers. So I think that's really important, is that technology will always have its say when it comes to database management. But remember how you treated them when they actually close the loan with you. And that's the same kind of treatment. There is a problem in the industry when you have 80% people almost satisfied with their loan officers, but only 8 to 18% coming back to work with them. That shows you the gap, right? I mean, in that case, just do a really bad job and go to beach and don't care, because you're putting in so much work to actually care, and then lose on so much money. And we are not talking a small amount of money. As I said, my first 7 clients are probably worth $500,000 each. Imagine that through the life. The problem is that we don't think of this business as a 10-year, 15-year, 20-year business. I always tell people that you should be working on a 2 months, 2 years, and 20 years plan at the same time, unless you're 80 and then ditch the last part and just work on the first 2. But you should, is because that's what this is. Some of the loans that you're closing today, I mean, I'm not even that old. I'm already getting clients, the son of their clients or the daughters of their client that I closed 10, 15 years back, saying, hey, my son just graduated from college and now he wants to buy a home, or she wants to buy a home because she just graduated from college. So you can see you're already into second generation. By the time I die, I probably will be into my 4th generation, I guess, serving my clients. But that's the long-term view of it. And that's what it's important, that you remain in that personal touch, even if it's technology has its play of auto campaigns and auto emails and auto text. You're muted, Chris.
There we go. Sorry. So we've got phone calls, emails, and text messages going out. Do you have a rate alert system inside your CRM that notifies you when there's an opportunity?
There is. So, and that's a technology we are building ourselves. So there is a basic capability in the CRM. But what we are building, and I can't disclose everything, is way more advanced than just basic rate alert. So rate alert by itself, I think probably less than 5% of the lenders use in the country. But this is way more advanced than just basic rate alerts, because see, borrowers may not qualify based just on rate alerts, right? Given where the rates are right now. But people have several other needs for which there are no alerts that's built in the system, any CRM in the country. And that's the technology we are working on, probably hope to go live in 3 months once we are ready with that.
That is amazing. Absolutely incredible. Okay. Now to the technology portion and side of things. So you mentioned that a big play of yours is going after prop tech, fintech companies, and I'm interested in the dynamics of that. So are you providing the real estate platform so that they can leverage their listings on your platform and you get the mortgage as a result of that? How are you leveraging technology into the business?
Yeah, AI at multiple places. So of course, the way you can use AI is you can use it for content generation, which is your ChatGPT, and I have taught multiple classes on ChatGPT and various AI tools. So if anyone is interested, they can probably find some of those somewhere on the web. I'm not sure where it is.
We'll do some digging and we'll put them in the show notes.
Yes, and 2. Is for loan production. You mentioned you talked to Pawan last year. A few weeks back. I think they do a good job with their AI on loan production. We just launched what we call InstaTech, which has a lot of AI elements into it. The loan actually starts underwriting the moment the borrower starts starting the loan application, which is crazy, is because we don't even wait for them to submit the loan application. The AI actually starts running the moment they start with the loan application, which is a paradigm shift, is because, as far as I know, no other platform in the country actually does in a dynamic way while in a live environment. They actually wait for the information to be submitted,
right,
and then the AI or some kind of technology or automation starts playing. Just to give you an example, for example, is that somebody, so we have an integration where someone can connect their bank accounts and can download the bank statements, which of course a lot of point of sale system has, so nothing super fancy about it. But where we go beyond that is our AI will actually read what the bank statements has. And even beyond that, let's say if you have $60,000 deposit, we will actually ask, and this is the dynamic way of doing the live underwriting, so to say, is so the platform will ask the borrower saying, hey, where is the 60,000 coming from? And let's say, hey, that's coming from Uncle Chris, and that's a gift. I said, okay, great. What is Uncle Chris's full name? Okay, what's their email address? And by the way, if 60,000 is 59,988 because $12 got deducted because of wire transfer, we adjust for that. We create a gift letter while they are completing the application. By the time the application is done, the gift letter is ready for e-signature by their uncle and the borrower while they were doing the application. And that's a, as I said, that's a huge paradigm shift,
Wow.
and probably the first of its kind in the industry, where it has dynamic live underwriting and workflow automation while the application is having. So that's a huge AI play. And the third thing where we are using AI is really preparing the offers for the sellers. So if you were to go to instaoffers.com, by the way, if you get a theme, all our branding starts with Insta. So it's like a Google and Apple play where we try to keep consistent branding. So it's InstaTech, Insta Offers, InstaMortgage. So Insta Offers is an instant offer for sellers. And that offer is powered by AI, is because otherwise it's impossible to get, say, an offer for a property, a cash offer for a property. And we give 4 different offers in almost 30 seconds in most cases. So the AI powers that. It brings in the value, it brings in the cash element, it builds the entire estimate for the sellers and provides that. And for us, the big play is almost 70-80% of sellers eventually buy a home in the next, say, 3 to 6 months. So that's a buyer lead for us. That's the way we look at it. And we are helping our real estate agent partners get those listings, which they might not have been able to, and able to compete with Zillow and Opendoor, and thus hoping that law of reciprocity kicks in, where they get to work with us with their other clients that they might have on the buyer side. So that's our play. So we are really using technology, Chris, for improving the business, and not just for the sake of technology. Not to mention, we built the mortgage industry's world's first digital human called Rachel way back 3 years back, when AI wasn't even a play in the industry. We were probably the first in the world within this space that we did that. So yeah, we have been in forefront of technology, something that we believe that combined with people and culture, I think technology plays a huge role in where the companies will be, say, 5 years from now, and that's where we are heading.
Yeah, and I cannot agree more. And that AI chatbot still live on the website and still works it's just a joy to work with. So
It is.
That's amazing. So to go back to the underwriting, so I was speaking to the head of a bank last week or the week before, and talking about leveraging automated underwriting processes and cost savings and all those wonderful things. And the main issue that they had with the whole process was security and not giving any of the client information outside. So are you developing your own internal AI, basically with plugins, and you're running your own internal AI systems? You're not leveraging a ChatGPT or something like that?
We are not. We are using ChatGPT for something completely different. So Rachel, the digital human, that's powered with ChatGPT. If you go to our website, it actually says we took ChatGPT and made it human, because we took ChatGPT and integrated with our digital human, which is what we did. So ChatGPT is a large language model, and we use it for a very different purpose. But all the automations around underwriting and workflow is all built into the platform and has no external vendors per se. So in fact, InstaTech as a platform has very little outside vendors. It's a point of sale, borrower's portal, product pricing engine, LOS, underwriting automation, workflow automation, mortgage coach, kind of a sales comparison tool. All of that is built into one system. There's no outside integration with Optimal Blue or Simple Nexus or Encompass. That's just one integrated system. It's a very 2023 kind of code, which also helps us kind of update things pretty quickly. I mean, it's not to undermine any other technology here, but a lot of the market share or market leading technologies were built 10, 15, 20 years back. And so making changes to them is very hard. So this being built on a very new architecture and infrastructure, it's easier for us to make changes pretty quickly.
That's amazing. And I had another guest on the show, and he wasn't willing to talk about it on the show, but they actually have AI writing its own code. Like, it's literally building itself based off the iterations that it's learning, which is just mind-blowing when you think about it.
It is. Yeah.
Incredible. Okay. Well, you're so generous with your time. Shashank, I do have just a couple of other questions.
Sure.
Specifically around, you started blogging, 2008. And here you are today, your business, InstaMortgage. If you're in the San Jose marketplace, in the general marketplace, you show up number 1, 2, or 3 in the Google map placement with all of your ratings and reviews. How has that helped to grow the business, and what type of results do you get from that?
Immensely, immensely. I mean, I don't know, I've been a huge fan of customer reviews again from day one. Some of my first 7 clients would probably show up on Yelp because I would have requested them to review me even back then when reviews were not even a big thing. I don't think Google had reviews then, Yelp did.
Yeah.
And so I used Yelp for the first 4, 5, 6 years very strongly until Google started showing the local listing on page one with local searches. So, and it's probably the easiest way to rank on page one of Google, right? Especially in local markets. San Jose is still a very big market, it's Silicon Valley, but not a lot of loan officers work in big metro markets. A lot of them are smaller markets, smaller neighborhoods. Imagine being able to capture that page one, rank one listing just because you have a local listing and you have some reviews on it. That's all that you need. It's the cheapest, fastest, and most effective way of showing up on search results, not to mention that gaining a huge amount of credibility because you don't have to get 250 reviews. I mean, I usually say that 20 is probably kind of a tipping point for reviews. Once you go
Yeah.
past 20s, you sound fairly credible at that point of time. So yes, you can have 250 or 2,500, but after a point of time, it's kind of all good. It's there's nothing bad, especially if you're a one-person loan officer. I mean, drive your reviews, get your first 20 reviews. And once you do that, you come across as fairly credible. So whether it's Yelp, Zillow, Google, Facebook, whatever you use, but Google just tends to be way more powerful than everybody else is because it's Google's own Google My Business or Google Local page. And it shows on page one of their search results, even if they're not searching for you, as you rightly said, you could be searching for San Jose mortgage lender or mortgage broker or whatever. Similarly, for your market, they may not be searching for you. They might be searching for a local mortgage lender, loan officer, broker, whatever you call it. But yeah, I mean, if there was one marketing idea that I'll give to you for free, not just from me giving it to you for free, but for you to implement it for free, that's that. I mean, that's probably the most powerful thing that you can do, which doesn't cost you anything.
Yeah, I could not agree more. And we are huge on leveraging AI right now in order to rank those profiles because Google, as you see, is giving the front page over to AI more and more every day. And we've started to notice with your blogging strategy, Google is looking for the most frequently asked questions in each marketplace. They're displaying them on the front page, and they also have a section in your Google business profile where you can answer questions right there on there. So there's some really cool things that we're doing with AI that have to do with those rankings. Do you have a rough idea of how many phone calls you get as a result of that ranking, or like how much business that's worth for you every month?
So I used to track that very efficiently. With pandemic, with people being out away from work, it's a lot of it is it's difficult to track some of these phone calls anymore. But
Yes.
even way far back, Chris, I mean, I used to do presentations how to build a 6-figure blog, and so my blog mortgageblog.com used to make me $100,000 plus in income, and I'm talking year 4, year 5. I mean, we are sitting on year 13, so of course it has way more traffic than what it used to be back then. So just to give you a sense that even almost 8, 9 years back, and that's a net commission I'm talking about from spending $0 because this is all organic search that we are talking about.
That is absolutely incredible. That is amazing.
Mm.
Well, Shashank, what is final question? And again, thank you for being so generous with your
Of
time.
course.
You're at the forefront of technology, much more so than a lot of people in the mortgage industry.
Mhm.
What do you see for the future? Yeah, I mean, with AI and the advancement of blockchain, how do you think our industry is going to evolve over the next 5, 10 years?
First of all, I'm not too worried about the loan officers. So I wanted to kind of clarify that because I do get asked that question: is that what would AI do to loan officers? AI will not replace loan officers, but AI will replace the loan officers who are not using AI. Let me put it that way. so, so you have to get used to it. And that's what I'm saying. I've done a lot of free classes. That's what I've been doing for more than a decade, is that I bring my learnings to the masses and practically for free almost every single time. because I mean, giving back to the industries is one of the things that I work on. But that's one thing. The reason why I say is that I'm not be too worried about loan officers going the insurance agent and travel agent way is because I have kind of data to prove it, not in the mortgage space, but in the real estate space. In the 1980s, 81% of buyers and sellers were using real estate agents to close their transaction. And even after the advent of the Zillows and the Redfins of the world, which some of them were supposed to wipe out the real estate agents. If you go back to articles from 2010, 11, 12, you'll find hundreds of articles talking about how real estate agents will go the insurance agent way. And come to think of it, in 2020, according to NAR, 88% of people used real estate agents and to buy a home, buy or sell a home. So if anything, their market share or their share of the overall transaction actually went up about 10% in last 40 years, even with the advent of so much of technology and so much of prop tech companies that happened. I see the same thing for loan officers. I'm not too worried about their future. But that's why I talk about the fact that the combination of people, culture, and technology is what will drive the future of the industry. So when I say people, whether you are one person people, so to say, one person loan officer, or a company with hundreds of people in it, it's the quality of people, right? If you're one person, then how educated you are. Do you use the 4-hour rule that say Warren Buffett and Bill Gates of the likes of people who's spend 4 hours a week on learning new things or deepening their learning? It's surprising that even though we have to learn so little, we still don't spend that much time. Even though, and if Warren Buffett and Bill Gates has time, I'm sure we have some time as well on our hands to do that. That's something that I've followed again from day one, is that 4 hours or more of learning new things every single week. I'm not saying that it happens every single week. Sometimes you skip a week or two, but so that's the people part of it. Technology, of course, you mentioned that we have talked about it for the last few minutes. And that's why I said, I mean, you have to be at forefront of what AI does. If your company is not, then maybe you should look for a change and see the companies which are at the forefront of AI. But really, the two of them get glued together by culture. You can have the best people and the best technology. And this is not to take any names, but I'll still mention Better.com. That's what happened to them. I mean, they had the people. I mean, they had the money. I mean, $1 billion of funding just from SoftBank. And on top of that, several other fundings with Goldman Sachs and Amex and everybody else. So they had the people. They had the brightest people. They had at least supposedly some good technology. They just didn't have the culture to drive it. And that's what a company that could have been an IPO with multi-billion-dollar valuation probably lags so far behind. And that glue has to stay, whether it's 5 years from now or 50 years from now. This relentless focus on customer experience, whether it's through education, through technology, through process improvement, if that's not part of your DNA, of your organization's DNA, you're not going to survive the future, is where I think. So it's not just one thing. The way I'll put it is that if you're good with 1 out of 3, you're going to die. If you're 2 out of 3, you'll survive. But the companies that will thrive and will be the way of the future will be the companies that excel in all 3, which is people, culture, and technology.
Wow. Well, that is a phenomenal place for us to end. Shashank, thank you so much for all the value that you brought us here today and for being a guest on the show. If people want to know more about you or about any of the brands, InstaMortgage, any of them, where do people go to get more information?
Yeah, of course, InstaMortgage.com is the company site. If you want to connect with me, I'm at shashank.redemption on Threads and Instagram. So that's the place to connect with me. My podcast is called Shashank Redemption, and so is my newsletter. So you say I'm kind of steal some stuff when it comes to branding.
Well, it is, and I would like to shout out the podcast because it is absolutely phenomenal. So we will have that in the show notes and make sure y'all head all over there and give that a listen as well. So everybody, thank you for listening and thank you for being here.